Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to our FX analysis on Friday, the 1st of October 2021. Let's just start with our, we'll go to the economic calendar first, guys, just to get a roundup of where we are. Yesterday we had manufacturing PMI. We did say it came in slightly under forecast in China. Nearly said Japan there. GDP growth rate in the UK came in at 23.6, forecast 22.2, previous minus 5.8. Remember, these numbers are off the back of the lockdown. People starting to get back to work again, guys. That's why they're so high, but higher than forecast. There is a little bit of a problem in the UK in that the furlough scheme that the British government set up at the start of the pandemic is coming to an end this month, guys. And they reckon there's about 1 million people who are still on it who are now going to lose those benefits. So either they better get into a job right and fast, or we're going to have a massive increase in unemployment next month. And it'll probably be a little bit of both. But whether that's going to affect, these are unusual circumstances, guys. These aren't things that are indicative of the economy as a whole. In other words, that's not going to be carried through next year and the year after and the year after. So I don't think it's going to necessarily be, long-term negative for the UK economy or for the pound, but we need to be aware of them. On to Germany, unemployment and change and rate. We did talk about these yesterday. Come in at minus 30,000. It's in red because the forecast minus 33,000, but it's still a move in the right direction, guys. Actual unemployment rate come in at 5.5, forecast 5.4. That's not a bad number either, considering what we've been through. And inflation rate in Germany come in at 4.1, forecast 4.2. I don't know why it's red, because once you start getting into those sorts of numbers, inflation, it's not necessarily good for your economy. But I suppose the way this system's set up, you have a forecast number. If it's less than, it's red. If it's more than, it's green. And inflation's one of those things that if it comes in around 2%, that's good. If it's below it, that's bad. If it's above it, that's bad. So I suppose it's difficult to write a program for that, because then, there's a lot of input that needs to go into that. US, so I don't think 4.1 is a particularly good inflation rate, guys. United States GDP growth rate coming at 6.7. Now, a high growth rate's good. Forecast 6.6. So, things are, the economy in the US seems to be good. The economy in a lot of the world seems to be good, but we've got to factor in, all of the stimulus that's being produced by central banks and via governments is going to start to come to an end. And then they're going to have to want to start clawing back in order to try and control inflation and make that change in such a way that it doesn't send the markets into a spin. But what we're interested in this recording is just how this affects currencies, guys. And it just simplifies it a little bit, particularly for me when I'm talking about it. And I know I'm going to cross over when we're talking, but as I do this more and more, I'll get more used to sticking just to currencies here, guys. So today, we're looking at core inflation rate in the euro area, and then PCE price index in the United States, market manufacturing PMI in the United States, ISM manufacturing PMI. And these will all give us an idea of how the economy is going to look going into the next quarter, guys. And then we've got Michigan consumer sentiment final, which is always the last item on a Friday. And to be honest, I don't pay much attention to consumer sentiments. So there we have it. Have to see how they come in. If these numbers come in, that will be good for the US economy, which should help the Fed to start to taper. And And as they taper, the dollar should get stronger. Now, once the rest of the world gets to the point in their economies or in their cycle, as the US is at now, then you'll start to see the dollar drop off, guys. And it's just about, is that going to be a month's time? Is it going to be 2 or 3, or is it a full quarter away? But between now and that point, I think we're going to see upside to the dollar. Now, that doesn't mean it's shooting up, it just means it's going to continue in an upward movement. So that's the way to trade it. And then we'll start to see the figures coming out of places like the UK and places like Europe, probably a lot more important, because the euro makes up 57% of DXY. Japan also. As you see them making the moves and having the figures coming in, you'll see the banks starting to tighten, and then you'll see an interest in the money going to where money's going to be made, and it'll start coming out of the dollar. Okay, so that's the little look ahead, guys. October is going to be a really interesting month for stocks, and that's part of the reason that I'm kind of getting back focusing on currencies, because I think stocks could get slaughtered this month, guys. If they don't get slaughtered, they'll probably at least run flat. So let's look for the opportunities back in currency. Do you remember we went from currency into stocks for a lot of months there, because the currencies were very unpredictable and the stocks were all going up? Well, that's coming to an end. Stocks are starting to run flat. There are opportunities and we will look at them. But for now, let's focus on currencies, guys. You go to where the movement is, guys. Okay, so DXY. Oh, yen. We were on yen. Didn't talk about it. What we said about the yen was, when we were here, we said it would drop. But when we draw these, if we think it's going to extend down here, then obviously we draw it like that, because they always move in a sawtooth manner, guys. Maybe we pulled it in there. But the point is that if you've caught it from there, or the breakout from there, fantastic. But don't be jumping in when it's down there. Why? Because at some point it will pull back. And if you get in there, then you end up in the red. And if it decides that it's had enough of going short, then it just goes up and up and up, and you chicken out, and then a day later it starts coming off again, guys. So don't get caught out buying at the wrong point. It just makes life a lot easier for you and a lot less stressful. Okay, so we've had the start of a pullback. What we've got to do now is let the thing run. Let's see what sort of pullback it is. It could be a sharp move that goes like that. A lot more difficult to get involved in, but does that. But it could well give us something like this, one of those on a smaller time scale. And then the next time it starts to drop, then we look to get short in the yen again. Now, this is the yen index, guys. Doesn't mean that there aren't other individual currency pairs where the yen's still a good idea to short, but we'll have a look at them as we go through. Next, we're going to look at DXY. Same story here. There's the trend at the minute. It's pulled away from trend. Look for it to come back. It'll not necessarily come right back to the line, guys, but you're looking for it to come back, back into here. Rather than doing that, look for it to come back into here, and then we'll look, into next week, maybe Tuesday, Wednesday next week, provided it does correct, guys. It doesn't have to. It could go long, but as we said earlier, you don't want to get caught going long there, and then you end up riding through this thing, and just at the point where you get fed up and you get out of it, it takes off and goes long. So we wait for it to correct. If it goes long from here, it doesn't matter, guys. You wait for the next correction. And if you're already in it, then what you've got to do is decide where you got in, whether it was there, or even back down here, maybe from there, and get your stop to zero, guys. So if it comes right back down again, you don't lose out if it does that. But if it turns and starts to go again, and you've been stopped out, well, there's your opportunity to get back in again. But it's not nice. It isn't nice having, 5 or 10 or 15% up, or whatever amount of dollars that is for you, and watch it slowly coming back down. And then you start to second guess yourself. Therefore, you have to do it systematically, guys. Make your decisions systematically. Because if you don't, then you'll second guess yourself all the time and you will stress yourself out completely. So I'm just showing you what I do, or what my system is. It's up to you whether you make up your own system, but you need to have a system. Okay, Euro USD, we're having that slowing down effect. We're looking for some sort of pullback before we get the next move. Is there 5 in there? Well, I don't go in for counting what A, B, C, 1, 2, 3, 4, 5. You look at it when you've been at it long enough, guys. That's an impulsive move down. There's possibly a 1 in there, a 2, maybe a 3, maybe a 4, maybe a 5 in there. It could pull back up into there before it goes again. Doesn't have to, though. Doesn't have to. So you're looking for a certain structure. You're looking for it to do a certain thing, and then that gives you the confidence to get involved again. So for me, if it pulls back like this and then starts to break again, then we look to trade it down. Pound, be the same thing. As I said yesterday and the day before, you're looking for a pullback to get involved in it. I actually have that trend line in the wrong place there. But that was because if you go back a few weeks ago, we were looking for the dollar to come off these lows. But then the Fed came out and were a little bit more hawkish, and that started to push bond rates up, and and therefore the dollar started to strengthen. So we're looking for a pullback to potentially trade in that direction, guys. Aussie US, not as clear cut as the other two there, but nonetheless, if you had a pullback up into here, maybe you would look to trade it down. Not as happy with that one as would be the pound or the euro. The New Zealand, yes, looking nicer because the New Zealand's weak at the minute. If you've got a pullback like that, yet again, I suspect we've got our alarm line on the wrong direction there. US CAD, not so much, guys, and the reason being that the CAD's strengthening and the dollar strengthening, so they're cancelling each other out. Swedish krona. Yep, we've had the pullback, we've had a move up. I suspect it'll do that for a little bit, and if it does that, guys, then there's potential trade back up there. USD yen, well, there's the pullback on the yen. That's what we're looking for, guys. That's what we were drawing there. And then we said, of course, it could come steeply. When I draw these, I'm looking for a sort of, the ideal zigzag, but you don't always get them, guys. In fact, most of the time you'll never see something like that. But what the difficulty with doing Elliott is recognizing on live charts what Elliott was talking about, because most of the time it doesn't look like that, but there are things where you go, oh, that's a pullback, that's a zigzag, that's an impulse, but they don't look exactly like Elliott said, and that's just about training yourself. And I've trained people in the past where they've argued with me about things, and then they go, oh, I've got it. And I think, no, you haven't got it, because now you think it's painting by numbers. It isn't painting by numbers, guys. And every now and again, it will do exactly what Elliott says, and it will look beautiful, and then people think they've got it. But I'll have looked at the thing and I go, no, don't be trading that long, because in the bigger picture, this is going to go that way. But they tell me, oh, we've got it right. You've got that one wrong, Stephen. I don't mean in a nasty way. It's just, when you're conversing with people, and the next thing you know, they're down to there. And, they'll wait for it to go again. I'm going, no, the trend's that way. And, then they start losing money, then start second guessing themselves, then they start second guessing Elliott, and then they disappear. And, they go from, I'm talking about intelligent people here, guys. I'm not talking, there's not very many idiots trying to do this game. Inexperienced maybe, but certainly not unintelligent or uneducated people. So, just because someone is very good at what they've been trained in, whether they went to university or whether they, the years and years of experience, because they're good at that thing, doesn't mean that they're going to be good at this initially. Like everything else, it takes time, guys. It takes time. And then you're still going to go through periods of where you get it wrong. And then you've got to learn to stop trading or to, change what you're trading or change something that you're doing. But it does take time, guys. Okay, so USD Swiss Franc, yet again, we're looking for a pullback, coming back into trend, and then maybe see if you get another push up there. I'm not overly excited about, what happened there? I was just about to say I'm not overly excited about the prospects for gold, but we'll have to see where this goes to, guys. Now, I was quite heavily involved in gold. I took a lot off the table last week, and I kind of said to myself, the old thing, I'm selling this week. Wait do you see? It's going to go long soon. But that's not, one swallow doesn't make a summer, guys. There's the trend. It hasn't broken out of it yet. So I'll not get too excited about that. But what I was expecting here was for this just to continue down. If it breaks out of here, then we might start having to think about why is this happening and is it worth getting involved in? But I don't want to start talking stocks again, guys. But that will be part of that. Will be money's coming off the table in the stocks, and I'll do it from Monday on. I'll do a daily recording like this just about stocks and the stock markets, guys. And I don't want to get them mixed up, so we'll leave it at that. That's a surprise, but it hasn't broken out of that structure yet, guys. So I wouldn't be calling this long yet. This could well fall again, guys. So, but I would love it to go long because, as I say, I've probably got. Just trying to think how much I took off the table. I've still probably got 7% of the account on gold. Silver, there's the same move on silver, but yet again, it's still within that structure there, guys. So it could continue to fall, but let's see if we get a breakout. We get that breakout, we'll be looking for a setup to see if it's going to continue to climb. Bitcoin, there's a move in Bitcoin as well, with possibly a little running flat there, guys. So come into there. What we need to see here, and let me go over to Flipboard just to, I hope I'm not crossing too much into other stuff here. This guy here, Kiyosaki, trying to think of what his name was there. Robert Kiyosaki, guy that wrote Rich Dad, Poor Dad. He's predicting that there's going to be the world's biggest crash in October. Now, that doesn't mean it's going to happen, but the very fact that anyone is talking about this sort of thing, guys, you have to sit up and listen and say, well, listen, this might not happen, but let's just cover ourselves a little bit in case it does. And I haven't waited for him to tell me it, guys. I've been taking money off the table for the last month or so, and I'm down to about 50% invested and 50% sitting in cash. Is that the right thing to do? I don't know. If the stocks take off from here, then it will have been the wrong thing to do. But if they crash any further, or if they move short any further, then it will have turned out to be the right thing to do, because I can buy back in to the same stocks if I wish to that are sold out of at a cheaper price, guys. So, you do these things, you try them. But what he's saying is that, I don't know if this was the article that I read, guys, but he's saying that if this happens, that there's it there. That's when I'm going to be buying more gold, silver, and Bitcoin. But he says it'll crash with it. He says when it goes, everything will go. And we did see that last time. So a lot of things that used to happen haven't been happening recently. It doesn't mean that that won't work in the future, but at the moment, things that used to happen weren't happening last year. When we had the big crash, gold went with it, oil went with it, silver went with it, and all the things that you would think people would move their cash into all went. And the reason was that they were getting margin calls and they had to sell every asset they had to be able to try and cover those margin calls, guys. So if we did have a massive crash, okay, let's be careful with the language here. If we did have a deeper correction than the one we've had so far, then you could see gold and silver going short with them. Now, the reason that I got into gold and silver was to cover for that. If we go back to say gold, when the stock market, and I'm back to teaching again here, guys, and I'm not sure how much teaching I should really be doing in these on a daily basis, but if the stock market does that, generally speaking, gold should do that, guys. Last time round, that isn't what it did, but it did respond. So we go back. Oops. Now we're talking about on the day, as it were, or on the week 2021, 2020. There, guys. It was around February, March 2020. So gold had a sell-off. Now, it's on a daily time scale, guys, so that doesn't look like much. But if you were long in gold, and then you ended up with 1, 2, 3, 4, 5, call it 6, 7, 8 days, and of course, we have the advantage of knowing that it then rallied from there. We did 8 days of a drawdown. Who's brave enough to continue to hang on to gold after the 8th day, because you're expecting the 9th day, the 10th day, the 11th day, guys? And that's what we're talking about there. So that's only if you get a crash as opposed to a correction, guys. If it's a nice steady correction, then people will gradually move their money out of positions and they'll move them into something a little bit safer, either cash or gold or Bitcoin or whatever it may be. In that case, we could see gold go long from here, and silver and Bitcoin and Ethereum. But if it's a fire sale and everybody suddenly runs out the door, then you'll see gold do that. You'll see Bitcoin doing that. You'll see. So it's a bit of a precarious situation at the minute, guys. So we'll keep an eye on it. We'll talk about it every day. And at some point, I may turn around and say, hey, guys, I think it's time to get into this, as opposed to being wary. All right. So Bitcoin, same thing. Could push on up from here if the stock market is gradually coming off day by day. But if the stock market does that, then that will go with it, because people will sell whatever assets they have to cover their margins. And I know a lot of Bitcoin's held by whales who won't sell for any reason at all, so maybe it won't be as hit as hard. But it has, it has a track record, guys, of making major moves down. And yet again, that looked like nothing, but that was from $20,000 back down to $4,000. And that's a lot of money to lose, guys. Look at that. So don't think that Bitcoin can't come off like that. And there's the recent one as well, guys. If we fib that, just fib it from the zero, it's down over 50%, guys. Let's just call it 55% in a matter of 6 months. So Bitcoin can also lose its value, and it can lose it quickly. Doesn't mean it can't come back to there, and it doesn't mean it can't break through it. But you would not be surprised if by January, February next year, Bitcoin was there, and therefore at that level, I might well be interested in trading up. And the same with Ethereum, guys. If this comes off deeper down into there, then I'd be keen to start to pick some of it up down around there. Could take off from here, guys. Even if it was just for this month, while people are sort of wary of what the stock market's doing, you could see, because there's the breakout as well there, guys. Could push on up from there. But yet again, it hasn't broken out of that structure there, guys, yet. Oil is having a little pullback, which is what we've been looking for, and it probably will go long again, guys. Euro Cad, we were looking for some sort of setup. It dropped. Yes, it's come back again. Is it a little running flat? Possibly. The reason being, CAD staying strong, Euro's weakening, with regards to the dollar, obviously. And therefore, rather than, I'm not really sure, that was an alarm line. We'll leave it hanging around there in case we need it at some point. So rather than having the pullback, it is possible that this has given us a running flat and it's going to push out from there. I don't like using running flats as entry points, guys, but there is the possibility of that. Euro Oz, that alarm line's been set off again. So yet again, possibility that it's going to continue to drop. Not enough for me to want to trade it. Euro New Zealand. Yeah, well, you're trading possibly week against week, so don't be touching that. Euro Yen. Well, there's that pullback on the yen. But yet again, I prefer to trade the yen short against the dollar once the correction's finished, rather than try and second guess two currency pairs, guys. Euro Swiss. That's the gold price. That little move up in the gold price has probably pushed the Swiss back up against this. Yet again, it's not for me at the minute. Pound CAD. It's nice, but I'm not sure about it. Pound Oz, not sure about it. Pound New Zealand, eventually it may drop, but not sure. Could go either way. Pound Swiss. There's the gold price pushing it up. Pound Euro pulling back against the euro. I don't like trading that. You would have to really understand this and become an expert in it, because through there, guys, you get in at the bottom, out at the top, in at the bottom, out at the top, or, in between it somewhere, so long as there were enough pips in there, as it were. And you probably could have done okay there with that, guys, but it is hard work. Pound Yen. It's come back down within this. Do you remember we drew this the other day? And it's coming off again. Let's see if it... I'm not expecting that. I don't even know why I drew that, guys. The yen's going short. You go through 50 charts, sometimes your head goes silly. No, this will possibly do something like that, guys. Aussie Yen. Well, we're looking for a setup. That's possibly a setup. Now, I mentioned Aussie Yen earlier in the week. Haven't done anything about it yet, guys. And to be honest, if I had got involved in it, it would have been in the red. Do we get involved in it today? That's the big question. I'm just looking for my notes from earlier in the week. Yeah, I've got Aussie Yen and New Zealand Yen. Aussie New Zealand. That's going to continue long, I suspect, guys, but we're looking for a setup on it. Aussie Swiss. See, the Aussie should gain from gold as well. Not as directly as the Swiss, but I'm just wondering at that. Leave that one alone, guys. Aussie CAD, leave that one alone. I never know what that one's doing. Swiss Yen, I suspect we're getting quite a pullback there. I suspect it will continue long, particularly if the gold price continues to go up. You can maybe fib it if you wanted to use a fib as an entry. I tend not to, but I wait for them to turn and start to move in the direction, guys, rather than trying to catch a falling dagger. Maybe it comes down to the 61.8, and a lot of people pile into it, and then it just keeps going, guys. So it's not for me. If it turns and starts to move long, then I'll say, okay, let's get in. Your first target's going to be your previous high, and I don't know if there's that much in there anyway. CAD Swiss, my old pal from... I've got to the stage, I think I'm frightened to trade this because I have a 100% record in it. I'm kind of going, don't blow your 100% record. So I'm really waiting for a good opportunity on it, guys, which I don't see at the minute. But CAD yen, maybe, yeah. We were looking for a pullback. We have a pullback. Can it go deeper? Well, yes, certainly it can. You know, it could pull right down to there, but I suspect that's the direction. Oil price should continue to go up. If not go up, it's at least going to stay up in that region, which is going to be good for the Canadian economy. And we've got the drawdown in the yen. Of course, you know, if the stock market crashed, you maybe could see a push into the yen. Safety. Yeah, at some point you've got to pull the trigger on something, guys. If you wait for the perfect thing, then you're not going to get it. But I would prefer to see a bit more downside to this. New Zealand yen. Prefer the Aussie yen. New Zealand Cad. Although I did write New Zealand yen down the other day, guys. But off the two of them, I'd prefer Aussie at the moment. Down into 50%, came back down into 50%. Often you get these sorts of slings, guys, where you have an impulse up, and then you get a long period of time, and you're waiting for it to go, but it goes, and then the next thing, it's off again, and then eventually it goes my way down there somewhere, guys. So this possibly is one of those. It's a bit complex. It's not a simple zigzag. You can see what I'm talking about there in a smaller time scale. You see it there, bump, 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 off it goes. You think, oh, here we go. Next thing you know, bang, it's down again, bang, it's down again. And then we're off to the races. Up, little double top, bang, bang, bang. That looks like a 5 there, guys. So then you start looking at the whole structure of it. And you say, well, that's one side of it. That's, there's possibly a 3 in there, guys. There should be a 3 in there. Maybe it's a 1, 2, and an A, B, and the C's truncated there. Don't overcomplicate it, guys. Just look at the overall structure and know your fundamentals. And you've this coming down. I wouldn't be surprised if this hung around down here for a while and then eventually started going long, but it's not for me at the minute. New Zealand Cad. Yet again, you see that same structure there, guys, and that's the reason that I'm saying you to be careful about it, because it looks, you've had this impulse up. It looks like you've had a 1, 2, a really long 3. This could be a 4th. This is it. It's going to go and give us at least something like that, and it doesn't. It comes up, truncates. That's probably your 5th wave on the way up, and then here we go, bump, 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 right back down again. And that would have been horrible to get involved here, particularly if you got involved there, because you're looking for the other end of the 5th wave, and the next thing you know, you're way down there somewhere. Which is the reason why you need stop losses, guys. New Zealand Swiss. New Zealand Cad. New Zealand Swiss. You see how this could potentially do the same thing, guys? But it's not a trade for me. So we came up to there and we're right back to 88.6 near enough. New Zealand Swiss. Take it from there up to there. It's back down to 50%. Could end up at 88.6, guys. Not saying it's going to end up exactly there, but you could see more downside to this. Not in such a way that you want to trade it. Be careful. If there's a stock market correction, gold could go long, which means the Swiss could do that. But there's too many ifs and buts for me, guys, so I'll just leave it alone. Okay, that's it for today, guys. I will get round to doing one of these 4 stocks as well every single day. Just give me a chance to get up to speed again, guys. Okay, speak to you all again on Monday. Bye for now.